Hey guys, and welcome to the Investor Series webinars for the Financial Freedom Podcast. I'm really delighted to introduce a prior guest, Christine Healy. She's the founder of Healy Pre-IPO. She gets accredited high net worth investors into private companies that are about to go IPO. So think about companies such as OpenAI, SpaceX companies, and she's here to talk about how she can help investors tap into this high potential market, increase their returns, increase their gains, minimize their risks. So I'm really happy to have her on. Christine, welcome.
Thank you. Pleasure to be here. Thanks, Chris.
Yeah. And so go ahead and introduce yourself and take it away.
Absolutely. So I'm really excited to share with your listeners an asset class that often is reserved for the ultra wealthy, for billionaires, or for professional venture capital investors. So specifically, I'm talking about ultra late stage pre-IPO companies, companies that are so large and in some cases so well funded, such high revenue that they potentially could be public companies in any other era of the past, or could be on the IPO docket potentially for the next few years. So we're talking names like SpaceX, Stripe, et cetera, that have reached hundreds of billions of dollars of valuation in some cases, but they're still on the private markets, meaning you can't just invest in them through your regular investing means, like going on your brokerage app, your Fidelity, typing in the ticker of one of these private companies. They aren't on there at all. So to access companies while they're still private, you have to go through a privately brokered or otherwise privately sourced transaction, which is very different from public markets. So I provide what I like to call my concierge-style pre-IPO broker access, where my clients come to me and I help them source these deals from all different types of sellers worldwide. I can help them negotiate, answer questions, and really give them a plethora of knowledge and resources so that they aren't going into these deals alone and they have me by their side to help explain things.
Yeah, fascinating. And so I know you have your slides and we can go through the slides. And if there's any questions, either from myself or the audience, we can address those.
Absolutely. So obviously the first slide is a disclaimer. So I'm not a fiduciary. I'm not a financial advisor. The role as a broker is a bit different. I help source and negotiate, but ultimately it's up to the individual buyer what they want, or it's up to them to say yes or no. So this is not financial advice at all. It's purely educational. So I have to say that for all of our protection here. Please be aware of that. Now, who am I? I've been involved in the pre-IPO transaction world for 7-8 years now, starting as a broker and in operations, both in the US and in Asia for these pre-IPO deals. So when I started in 2018, some of these public companies used to still be private at that point, like Pinterest, Airbnb, Uber and Lyft, et cetera. And that was the world I got started in. It was really exciting. Now this industry took off and I've been deeply involved in the industry ever since. Since 2018, I've been solely specialized in pre-IPO transactions of all different sizes. As part of that, at one point, I was the portfolio manager of a public pre-IPO fund that held more than 20 different pre-IPO companies in one portfolio. And I did that for 3 years until roughly a year ago, where I got the entrepreneurial itch and I started this business, Healy Pre-IPO, where instead of being a fund manager, now I get to help individuals and other investors directly to access some of these transactions, et cetera. So instead of just serving a fund, I'm now giving that access to individual investors and helping them get involved in some of their first pre-IPO deals. So it's super rewarding. I get to work with people one-on-one, and every single transaction that comes through my company, I handle myself from start to finish. So you know what you're getting every time. And I aim for a really personal, consistent service. Some people that are new to pre-IPO, it's hard to fully contextualize the value of this sort of asset class, especially for investors that may normally invest in public stocks or real estate. How do you make sense of what it means to invest in private tech? So first of all, you're not dealing with a cash generating asset. This isn't like some real estate investments where you're getting cash flow. It's not that type of investment. This isn't an investment typically that pays dividends or has that type of financial reward. The profile of these pre-IPO investments are high risk, and what you're hoping for is high reward. And that reward doesn't come in terms of cash flow, it comes in future growth. So you're looking for long-term growth here and hoping that the stock price you pay today will be less than that price that you could sell or the price that you exit after IPO in the future. So it's really like a buy low, sell high strategy in terms of what you're hoping for. Why is this asset class really so interesting? It's because companies are taking longer than ever to IPO. So in the past, a company might go public at 5 years old, 8 years old, something like that. But today, it's very common to see these tech companies be 12, 15, in some cases 18 or 19 years old by the time they actually go public. For example, when Reddit went public, Reddit was, I think, 19 years old. So when companies keep growing privately and choose to delay that IPO, because maybe they just want to keep tight control over the company and not bother with the distractions of being public, then all that growth is kept out of the hands of everyday public investors, because some of these companies are reaching really astronomical valuations and still private, like SpaceX that reached 400 billion in value just recently, OpenAI that reached 500 billion in their latest valuation. So if a company can be that big but not be available on the public markets, then all of that growth from zero up to potentially 500 billion can only be captured by the venture capitalists, the billionaires, and other folks that find their way into these private deals. So aside from just a fun asset class to invest in, there's really an access issue and a mission statement here in terms of getting more people access to have a financial stake in some of the huge technological innovations that are changing our reality, whether it's going to space, colonizing Mars, whether it's new military technologies like Andrew, whether it's new food technologies like Impossible Foods. Our world is changing in so many different ways through the innovations of these private tech companies. And so what I really love about this is giving more people a financial stake, essentially in our future. So they're not just bystanders in some of these radical technologies that are going to really determine the future in a lot of ways. So that's really rewarding.
And one question we have is, say, for example, you invest with Healy Pre-IPO, and let's say you get in at a good valuation, and let's say the companies never go public. How can you capture your profits?
Absolutely. So the IPO timeline varies a huge amount. You have SpaceX, which in the past has said they don't want to go public until Mars has been colonized, so it might be further away. And you have some companies that might be closer to IPO. It's never really guaranteed. We usually lack precise clarity, but there are other ways to exit. For example, if you've held for a certain amount of time, maybe there's other buyers in the market interested to buy your position that you hold. You might actually be able to resell while that company is still private. So as these markets become more active and more liquid, really, even though it's an illiquid asset, your liquidity can improve slightly. So you might actually be able to resell even if you're still waiting to IPO. What is concierge pre-IPO access? How does that differ from what else is on the market? So in a nutshell, this industry of accessing pre-IPO companies has become really so lucrative and so active that there's a lot of different services, brokers, crowdfunding platforms, et cetera, popping up. There's a lot of people trying to get a piece of the pie and a piece of the action. And of course, not all are as good as others. Not all are as experienced as others. Many of these services are very new, or the people behind them are quite new to this market, don't have that depth of experience. Like I say, I've been doing this day in, day out since 2018. It's hit or miss in terms of the quality out there. So what I see as what I do that's a bit different is I'm saying, I'm not trying to have this digitized platform that's cold and informal where people have to go do a huge financial transaction with an online website that they don't really know and trust. I'm saying I truly believe there's a lot of people out there that when they're doing these financial transactions that are so meaningful to them, want to deal with a person that they know well, where they trust their reputation and their experience, and they can get a really consistent service every time because you're dealing with me every time. versus maybe a 300-person company or some crowdfunding platform where you don't actually know at the end of the day if you can rely on the service that they're giving you. And so it's really an old school way to approach this very new school market. It's an old school service where you talk to me, I'm accessible, I'm responsible, I truly care about you being happy with the service, and I can walk you through all steps of this transaction and make it smooth and easy for you in this backdrop of this hugely scattered, chaotic market, which could be really confusing for new people coming in, people that might be highly skilled professionals. They might be doctors or lawyers by day, and they really don't have the time to go and learn this whole new industry and this whole new type of investing. So they can come to me and trust in my experience and know that I'll take care of that sourcing and some of those elements of the transaction for them and make it easy and smooth.
In terms of pricing, how is because I know, for example, there's through the whole pre-IPO process, there's pre-seed, and there's seed, and there's like series A through E and sometimes F, and then people are getting pricing per share. How does your pricing compare to your network of VCs? Are investors going through you getting a good rate, or is there a slight markup? Talk about kind of the pricing.
Absolutely. So one key feature of the pre-IPO market is that pricing is not uniform, meaning if you have 5 different sellers in a given company, maybe it's Anthropic or maybe it's OpenAI, you could potentially have 5 different structures and 5 different price levels or fee structures within that 5 sources that you've gathered. So that's a really big adjustment from public market investing, where people are used to going on their Fidelity app or going on their other brokerage app, and it spits out a price and you can go from there. People really need to be aware that pricing is all over the place. It's based on supply and demand. It's based on the price that different sellers are willing to sell. And so it can be really difficult to just go in on your own, because maybe an individual out there, maybe they're seeing an offer for SpaceX, but maybe they're just seeing one, or maybe it's coming from some obscure source. And how do you know the price that you're actually getting? How do you know if that price that you're being offered is at the top of the market, right on the money? Maybe it's below market. It's really hard for someone new to this industry to put that context around pricing. So that's one thing that I strive to do, is bring that context to the pricing. So we can, instead of just looking at any offer you might be getting from a crowdfunding platform, we can hopefully source a variety of offers and I can explain them to you. We can look at them together and see them on their own merits. We can have a discussion where I can explain the different fees and structures and compare one versus the other and help you out that way. And we can look to other data sources too, because I'm in this market day in and day out. I have a lot more data than just your everyday investor. So I can provide further context, like where have recent deals been trading at? Where are other buyers and sellers pricing deals right now? Or how does this price compare to the last primary round of the company? And all kinds of different data points so that investors can have a fuller picture than just that offer sitting in their inbox where they have no idea how to make sense of it. So my goal is really to specialize in a small short list of companies, really about 20 companies that are most active in the pre-IPO market. Names the big ones really: SpaceX, OpenAI, Anduril, Anthropic, Scale AI, Rock, a few others. And I like to stay really focused. So I do a small number of companies and I try and just do them really well. So my goal is always to get my investors pricing or terms that would be better than they can find elsewhere. So in addition to saving on price, we're also going to try and negotiate hard and save on things like extra fees and really leverage the situation to push back and get lower fees, lower costs, better terms, lower pricing across the board. So that's always my goal, to understand all the different intricacies and all the different areas we can push to get you a better result. In a nutshell, it's how to work with me. So obviously, if you have any questions, please let me know. This can be very confusing for people to access, but it doesn't have to be confusing. It's just a different system and way of working than public market investing. So I'd love to chat further, do one-on-one conversations if people would like, and we can do that straight away. Or I also have a mailing list where I send information about the pre-IPO market for people that just want to get used to how I talk about this market, learn a bit more, and get in my email ecosystem, that's an option as well.
Yeah. What you're describing actually reminds me a lot of like just the real estate market, because you value it based on just the location, or even like private art, these very exclusive places where people buy and sell assets. The other question is, what type of investor comes to work with you in terms of income level, net worth? How much should they, what is the minimum? How long should they be expecting a return, etc.?
A few things there to unpack. So first of all, who comes to work with me? I deal with clients, both buyers and sellers. I also deal with clients that are individuals all the way through to large institutions. So I like to keep it broad because that way I have the most flexibility in terms of who I can source a deal from for my clients. So I've got a really wide investor base and seller base. Who can work on these deals as an investor? The regulations are a bit specific, so you have to be accredited. So there's an income and a wealth standard associated with that. Typically, as an individual, you need a 200K salary last 2 years and into the future to qualify, or $1 million net worth outside of your primary residence to be accredited, and a few other ways to qualify. So there's a rigid standard there. But in practice, often people are even beyond accredited. They might be successful sturgeons or small business owners, and they've accrued some wealth and they're thinking, what's next? How do I take all this hard work and actually think about long-term growth? How do I think about generational wealth? How do I think about making what I invest in meaningful to me? So a lot of the times they've got these professional careers and they're seeing companies like SpaceX in the news with all those amazing milestones, or they're seeing ChatGPT. Maybe they're using ChatGPT every day or every week, and just having this vision of companies that are going to change the future, and being frustrated really with not wanting to just watch them, but wanting to actually have a financial stake in the success of some of these companies. So in terms of minimums, the minimums can be relatively high. So often you're looking at $50,000 or $100,000 per investment. So quite high. Some deals might be larger minimums, just depending, but investors should prepare for 50 to 100K minimums for sure. Yeah.
Yeah. And I know some VCs, they sometimes wait, I think sometimes it's 10 years, 20 years for their payouts. When people come to work with you, how long on average are they seeing a physical return?
Yeah, it's so variable that it's hard to set it. People often invest in these pre-IPO companies because whether they do end up IPOing soon or not, they're at a size and a maturity where they look a lot like they could IPO. So often these investors are hoping for an IPO on the horizon. But then you also have, like I said, companies like SpaceX, which no one's really expecting to IPO anytime soon because they don't really want to until they've achieved many more milestone goals. So for all we know, that could be 10 years away or more before they IPO. The holding periods can vary quite dramatically. The regulations require you to buy to be a long-term holder, and these assets are illiquid. Typically, that means you have to hold for a minimum of 6 months before you think about reselling or something like that, but ideally longer. So you want to be thinking usually in terms of years, not months for this type of thing. And then your exit could be if the company IPOs. Your exit could be if the company gets acquired. Your exit could be, in theory, if the company goes bankrupt or gets liquidated. Technically, that's an exit as well. Or that new route I mentioned, where depending on the situation and requirements, you might actually be able to resell through another transaction with a private buyer. So those are a few ways to exit. And as you can imagine, so many variables in which one might apply to the company you're looking at.
Yeah. Obviously, there's a lot of risks. The other question we have from the audience is, for example, let's say you're holding on to these Stripe or SpaceX or these shares and they go IPO and you see a substantial return. When can you actually physically dump the shares on the public market to get your return? Is it 6 months? And what about taxes?
Yeah, it can vary, but more often than not, you're looking at the normal 6 month lockup post IPO. That's the most common case. So if you have directly invested in a company, meaning you directly purchase shares, you're on the company's cap table, then after that lockup, the company's transfer agent will deliver your shares now public shares to your normal brokerage account, like your Fidelity or your Schwab. And that can take a few days as well, a few days to a few weeks, depending on how fast your particular brokerage is working with their particular transfer agent. But that process would start after the 6 months. So you might get your shares relatively soon after that 6-month lockup. If you purchased a stake in an SPV, what we call special purpose vehicle, basically a dedicated fund for a deal rather than a direct transaction, then it's pretty similar, but there's an extra step. If you've purchased in a fund structure, then after the 6 months lockup ends, the company's transfer agent delivers the shares to the fund, and then the fund delivers to your brokerage account. So that can again add a few extra days, a few extra weeks, depending on the specific agencies and services and how fast they move.
Yeah. One final question from the audience before we go is, recently Vlad Tenev, and I know a lot of Coinbase, and they're trying to tokenize these. And what are your thoughts? How are you thinking about it? How are you planning and preparing for this? If, for example, people can get access to these private companies through tokens?
I think different developments that are coming up, like tokenization, are really encouraging because it means that smart people out there are working on this problem of access, this inequality of access, really, where most everyday investors can't get into some of the most interesting tech companies. So when I see tokenization, it's really symptomatic in a positive way, I think, of that push to get more people involved, to have novel solutions, to have solutions that may be lower minimums for these kind of deals. So I think it's really encouraging in that way. But I also know from my experience, when I was the fund manager of Destiny, DXYZ fund for 3 years, the regulations can be really slow and really challenging in terms of getting the actual SEC approval to launch some of these products, especially novel products like Destiny was novel at the time, or tokenization would be a novel way to approach these kind of securities. So it can be a really intense, the process of working with regulators to get these new products on the market, and it can take a lot of time. So when Robinhood says, oh, we're coming up with this new strategy, or we're coming up with a new closed-end fund, that doesn't mean it's necessarily going to be available anytime soon. That means they're really starting the process with the regulators. And at times that could mean that launch could still be years away from that first filing with the SEC. So we're still thinking very long term. I think Robinhood and other folks are going to have a lot of friction and pushback as well from these companies. Many of these companies, SpaceX, Stripe, many others, don't really want their stock to be tokenized or used in these novel structures. And so that's really a challenge. They're going to try and obstruct these novel products every step of the way, or make that process even slower to actually come to market. Or some of the sellers themselves, maybe venture capital funds, secondaries funds, they also are very resistant to some of these novel structures like tokenization. So even though a company may come up with potentially a really cool and encouraging new strategy, the actual implementation of that can be quite complex in the private markets, because if none of the possible sellers and sources of OpenAI, SpaceX, Anthropic want to work with them, well, what are they going to do? Or are they just going to be able to get it through some random source at really extortionately high pricing? So I think it'll be interesting to see how those actually develop, and which platforms, which companies, if any, can actually execute on the vision versus just saying they've got a vision.
Excellent. This was really interesting, and I know the investor base and the audience will really love this. And again, to contact Christine, her contact is email or sign up mailing list will all be in the show notes. And thanks so much for coming on and giving us access to this fantastic information.
My pleasure. Thanks so much, Chris.